Hello and welcome at Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about one of the most famous stocks of this year. It's GameStop Corporation, traded at New York Stock Exchange, ticker name GME. Well, to speak about GME, it's easy and hard in the same way because we know that it's an enormous growth that took place actually last year and also continued at the beginning of this year all the way until end of January. Was not only due to company performance, of course, but also due to the fact that company attracted a lot of attention from the traders, and actually a lot of classical short squeezes took place, and the price was really going high and high and high. So this was really a bit of artificial demand, you can say. But now what is happening, and what happened by February, we saw this classical kind of cup and handle formation, and now since mid of March we are forming here let's say the converging triangle, and this is very interesting because in general these kind of patterns are quite bullish, especially once the triangle is about to finish, when you are close to the end of it. And indeed this is the case. We saw, like last two trading sessions, we were on the top of it and then slightly pierced. Today the triangle was finally pierced, but still the price stuck just at moving average 50, so the blue line. And we see now here kind of entrapping between moving average 20 and 50, the blue and grid line. We exactly started at moving average 20 and finished at moving average 50. So what still might happen, it could be a white-red combination, because these are usual for these entrapping situations. You can also see some very small volatility, negative volatility after hours. Here it's about 179.51. But what also could happen, we can go higher, and actually there is at least a level of about, let's say, 260 plus, where we could go and where we can still use it as, let's say, temporarily target. To be more precise, actually we can see it's even higher, it's about 279. So this could be, if we go there, it will be a really very strong resist line, because this was major resist formed also by mid of March. But if not, we will see. So how to trade here, therefore, we also need to take into account this enormous increase of the price, more than 10 times, and this big void between moving average 250 and 20. So here, and the reason for this big void is that this, to keep it into account, because this big void can work as a price attractor, because you see the price difference here is about, if it goes down, minus 57%, and we need to keep this in mind, because if we decline there, we need to be ready to average down those levels. So trading here is quite easy, but also dangerous, in the sense that it's not dangerous with respect to the strategy we provide, because we will give enough support resist levels. It's dangerous with respect of big volatilities and, let's say, patience that you need to show if you want to trade with GME, because here volatilities are such big that they really might go extremely red and extremely green, so you need to control what you are doing. So with this being said, how to trade here, at which levels to enter. Of course, if tomorrow we let's say show white red and we start declining, we will know that we need to keep some funds to average down. But if we continue growing, I still expect it to have some slight volatility. So anything, let's say, within the current body of today's white candle would be a buy, and we are not going to talk about cents, so we just talk about dollars here. It will be 157 and 183 as a first, let's say, channel to buy, as a primary technical pattern. And what does it mean, primary technical pattern? It means that we are actually expecting, as a first primary expectation, that the price will start growing from that level. And that's why we call it the primary level, primary channel. So it's expected that the price will start growing from there, and then you can take the profit. And speaking of profit taking, usually we advise to take profit from, let's say, 10 to 15%, because this position is one of the most volatile this year. We would advise to, let's say, to go from 20 to 25% profit taking once you can. This is really, I think, one of the rarest and biggest profit taking advice we gave at the channel, but this stock is also very volatile, so you can really make it if it goes high. So once you have this, you can take it. If you can take it, really take it, enjoy it, re-enter if needed, but don't hesitate to take your profit ever. If you do it, the position might expire and then you will actually go to losses instead of making profit. This is very important. So what happens if the primary pattern is not working, if the primary channel is not working, and then we start declining, if we have like white-red combination tomorrow, and then we start piercing lower? Well, then of course it might decline significantly and we just need to keep some funds to buy at the next support level, which will start here, and this level will be just clearly between let's put this one up, it will be between 102 and 77. So 77 and 102 will make for us a secondary technical pattern or technical channel. What does it mean? It means that if the first one is broken, if the first technical pattern is not confirmed, then the secondary pattern is this one, and this is the secondary level to buy. So we will discuss how to buy through. It will be non-linear buying and non-linear averaging down. So once you buy here lower, it can rebound. And why is this a good channel, 77 to 102? Because it's not only the channel that was formed due to technicalities, but also you can clearly see here moving average 200 will be by that time if we decline in the middle or the bottom of the channel, so it will make a double support. And also this void that we talked about at the beginning of this video, which is now about minus 55%, will be vanished, and then actually there will be no downwards pressure due to technical situation. So these are two levels to buy based on purely technical pattern. And if we have any negative catalyst, very hard to imagine at this stock, but if happens, we really need to keep some funds to average down to the principal levels such a way that if any doomsday scenario takes place, while people will be still exiting with losses, we will be able just still to buy and still make the profit. And this is indeed extremely low, but it is low indeed because that's what I said, it's a very hard stock to trade because volatilities, if they appear, will be incredibly high. So you need just to keep, let's say, your patience to buy at those levels. And this will be between 31.58 and actually 42.24. This will be the last risk mitigation level. It's not that we say price goes there, of course not, but it's not even that we expect. But this is the principal level. If any doomsday scenario takes place, the price from there should rebound because this is the very principal level, and then you can buy there safely to average down. And now speaking of how to buy, this is very important for those who are not first time at our channel. They know that we follow so-called mixed analysis strategy, where at the end of our opinion videos we provide a trading card which you can use as a guidance. And the idea of this analysis is that we mix 3 in 1. So one is technical chart recognition and analysis. Second one is looking at the non-linear averaging down and buying through support resist levels. Those levels are discussed here. And the third one is actually risk mitigation. So we keep some funds to average down if there is any negative catalyst coming in. So this is the third level. So with this being said, the last remaining to say is how to buy and how to average down. Well, here, although on a huge volatility, but it's still a classical 5-portion play. So what does it mean? It means you like to play here. If you want to play it the safest way possible, you might split in 5 portions, and then you can buy with 1 portion at the first channel, so the primary technical pattern. If it's broken and we pull back to the secondary technical pattern, then you can buy with another 2 portions, so you average down. And this is non-linear average down, so by this way, your average down price will be very close to the second channel. And if any doomsday scenario takes place and there is negative catalyst kicking in that will kill the stock, still no worries, you can just buy with remaining 2 portions in the third risk mitigating channel between 31.58 and 42.24, while others will be exiting in masses, and then you will be able to make your profit. Why is this way of trading very safe? Just look what happened in February. You see, there was enormous decline and people probably were thinking, well, it's end of the story. And if you would follow this kind of trade strategy here, you will still be able to buy the lower levels and actually make enormous profit. But if you would just buy at the top and then cut loss somewhere in the middle, you will just bear only losses. So as you have noticed, we don't discuss stop loss, we don't discuss cut loss, we discuss non-linear averaging down. We spent a little bit more time to trade, but it's really either a positive trade or in a worst case scenario, a draw or a minor, let's say very, very minor loss, which is close to the draw. So it's tuning to profit. We don't take losses. We spend a little bit more time. That's the way of trading here. So good luck with GME. If you like the way of trading and the way of the analysis, don't forget to subscribe to this channel. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.